This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel and it's finally Friday. It's been quite a busy week, right? A few live streams, one for CPI, one for the members, collab with Tony the Bull, daily content, trading et al. So I'm looking forward to putting my feet up for a few hours tonight. Today's episode, we're going to talk a little bit about inflation, a little bit about kind of the stock market and the US 10-year yield bonds, that kind of thing. Then we're going to move into Bitcoin, and these charts, I think, get progressively more bullish. There's some bullish news in there as well. And then as ever, we'll take a look at some charts, live positions. Before we do all of that, I know that there's going to be some people that say, oh, have you seen the news? Yeah, I've seen it. Look, I don't care, okay? I never care. I trade the cycles, I trade charts only, and I ignore the noise. So I'll show you exactly where things start to go wrong for me and in the charts and based on the cycles. And otherwise, until such time as those levels are traded, then again, I don't care, right? So let's get into today's episode. First things first, we know the CPI came in colder than expected, so happy days there, right? And then as of yesterday, we got PPI data come out. The headline was in line with the forecast. We were colder than forecast for month over month. Core came in below forecast, and month over month came in significantly below forecast, confirming that inflation is not as sticky as many people think. If you have something that's going like this, okay, on the way down, then I believe, and I still make the case, it's important to look at the overall direction and trend. I don't believe it's healthy to zoom in on one of these counter trend bounces and start jumping up and down and screaming, inflation is sticky, return to inflation is expected, all that kind of thing. I don't believe that's helpful, okay? And just as you should look at a chart zoomed out so you get the bigger picture, the same is true of macro data sets. I still am making the case that this is on its way to a short period of asset price deflation and that disinflation that we are currently in will persist a while longer. With that said, apparently this is what we're doing, okay? March's PPI was revised from deflationary to flat, and April's PPI was revised from deflationary by 0.5% to deflationary by 0.2%. Some would argue this is just part and parcel and leads to more accurate data. Others, like myself, that have a tinfoil hat on a little too tight, would argue that they're playing some games, but ultimately, do we really care? No, it's the overall trend which remains down, at least for now. So that's pretty much all I have to say about the inflation data. Of course, we'll cover it in more detail in the weekend's deep dive tomorrow. Sentiment in the stock market is recovering, and that's not surprising since we're pretty close to all-time highs. I know there's been a knee-jerk reaction to the news. Again, it doesn't matter to me at least. And we know that the bull bears just topped 3% for the first time in 15 weeks, which historically is a bullish signal over the next 3 to 12 months, telling us to keep an open mind about higher stock prices walking forward. And of course, at new all-time highs, we invalidate my top call setup from back in December, January timeframe. Over in the world of bonds, the US Treasury just bought back another $10 billion worth of its own debt, matching the largest Treasury buyback in history that we saw last week. So another 10 billion, okay? Again, what we seem to be seeing here is the US being forced to be the buyer of last resort for its own debt. And what's important to me, at least, is that the 10-year yield continues to collapse from that level. I don't want to see this turn into a higher low and then a higher high. Then I think we're going to have some trouble, perhaps even bond market issues. I've long been saying, in fact, since here, I said, I didn't want to see a higher high above this. When we got a marginal higher high, I said, I'm okay so long as it goes pretty much down in a straight line from here. So the big question is, will that or won't that happen? If it does happen, happy days. Okay, I stand with all of my base case. I don't think I need to change anything. But if this becomes a higher low here, followed by a higher high, then I think we have to go back to the drawing board and start putting additional situations on the table. Now, I'm not going to do that yet until we get a higher high. But the moment we do, rest assured, I will come back here and we will be having some slightly different conversations. The US 2-year yield tends to be the leading indicator for where the Fed funds rate is going to go. And notice how this thing has rejected beautifully off resistance and is so far, I hope, setting up for another move lower. Probably another one of these tell that to the bond market squiggles setting up. And if you think about it, that would make sense because we know that central banks around the world have been cutting rates and they don't tend to diverge very much. So the 2-year and the 10-year lower would put rate cuts in the Fed on the table, and then the central banks would kind of be more aligned. So we'll see if that happens. And again, very clear and obvious invalidation here. We break out, okay, start making higher highs and get a breakout of this downsloping red resistance line. And again, I'm going to have to come back here and go back to the drawing board. We're going to have to perhaps start to entertain alternative scenarios. Similarly to the 10-year yield, I'm not going to entertain any alternative scenarios until such time as the market shows me I need to. So for now, We continue to sit here and say, tell that to the bond market, expect another one of these, and we'll see if that plays out. Over in the world of Bitcoin, okay, I'm seeing more and more of these people say things like the 4-year cycle theory is dead in the water. But one thing I notice is nobody that says this kind of thing actually trades or understands cycle theory. To cycle traders, to people that know the rules and understand this, okay, this is a very, very silly thing to say. And even this case right here, I'm going to show you, doesn't make any sense at all, okay? When we first look at this, we can say, yeah, okay, this was a big parabola, so were the other times, and this just looks like a institutionally structured bid. We know retail is not really here. That's fine. Okay, I'm not arguing with that. This also looks like a pretty gradual cakewalk, doesn't it? Just slowly making higher highs and higher lows inside of this channel. And to the untrained eye, it's pretty easy to look at this and say, well, this time is different. Okay, no more 4-year cycle or whatever your BS narrative is. But the reality is, this right here is exactly what happened back in 2017. Okay, if I grab my little marker thing and draw a channel, approximately speaking, something like this, okay, we did the same thing. And then we broke out and went parabolic. So I'm not saying we will. Nobody can know exactly what's going to happen. But if we did do something like this, okay, it wouldn't really be that different, okay? Of course, I'm not really saying we're going to go to 900K. There's always one, Camel, you predicted 900K. No, I'm not, okay? What I am pointing at here, or trying to point at, is we have a gradual channel that then eventually resolves to a parabola. And so far, that's what we have as well. It's not that this time is super different. It's actually that this one in here was quite different. And the reason for that is pretty simple. In all the other bottoms, okay, this one here was a double bottom with a retest of the lows practically, then it went off. This one right here was an inverse head and shoulders type deal, okay, and then it went off. So bases had been built in both of these bear markets. Back here, we hadn't built a base. Did a bump and run, went parabolic to 14K, okay, and therefore we had to come back and retest the level. So it's actually this one that is the outlier. And that kind of makes sense as well if you think about it, since this was the first time we got a weird distributive type wave 4 type correction. So in summary, I'm starting to make the case here that this time is actually not different, at least not yet. Now, it would be different if it broke down from the channel without going parabolic. It would also be different if it just kind of walked up here, rolled over sideways for a bit, and then broke down. That would also be different. But so far, it's actually identical to 2017, and I can illustrate that further by showing you a couple more things. First of all, here's Bitcoin, okay? First angle lead-in phase, second angle, likely a third coming in soon. I've got even more charts to support this idea coming up in a minute, but for now, okay, this is doing normal things. I know it can be represented as a channel on log scale, but it is also setting up for a third and final blow off top angle. Not really out of the ordinary. If I hit it on log scale and show you this fractal, okay, this right here is, as you can see, the 2017 bull run. Now, so far, structurally, it's not that different, okay? Yes, it's taken a little bit longer, but if what happens is we now go parabolic out the top of that channel that I was showing you in the last slide, it will just look like this. So as you can see, it's actually not that different, despite the untrained eye being able to trick people on Twitter into thinking that it is extremely different. So unless this thing just continues, does not go parabolic at all, like I said, or distributes and breaks down, then it really is not different at this stage. One final note I would make here before we move on is I actually think all the narrative is present today to see a blow off top, right? We've got nation states perhaps competing for Bitcoin strategic reserves. We've got massive amounts of new companies adding Bitcoin to the treasury. You can never know if a parabolic blow off top is coming, but it's Bitcoin. And based on historical data alone, you'd be kind of silly to assume one isn't coming, at least to some degree. As I was kind of alluding to a moment ago, right, we've got even more companies. For example, this one in Germany becoming the first one in Germany to buy Bitcoin for its balance sheet. So there is still a large amount of demand for this. OTC desks are being drained very, very rapidly. And it just wouldn't surprise me if we are actually building towards a crescendo in the later part of this cycle. Again, right, Brazil's strategic reserve has just passed the first committee with approval recommendation. So not done yet, but gradually then suddenly, right? If we start to see more and more countries around the world adopting Bitcoin strategic reserves, that could certainly drive a parabolic blow off top. The funny thing is, as I've said a bunch of times before, we don't even need to see them implement it. We just need the market to start to forward price it and think that it's coming for sure. And that will be enough to drive the parabolic blow off top as well. Meanwhile, this right here is a log fib pitchfork for Bitcoin. The median line normally acts as a magnet for price, hence the target zone there. And again, this would kind of give us our 1, 2, and third and final blow off top angle into the top. It would be normal and to be expected if something like this was to occur. Does it have to go that high? No, of course not. But even if it just makes this kind of quarter line here, we're still going to be around 200K, okay? I don't think anyone's going to be complaining with that. On top of that, one of the Slice crew shared with me this, which is, I believe, the correct application of the hyperwave. I had before a trend line drawn down here for the hyperwave, and when I did this, it threw off all of the rules for the math, so it was always a bit jank, it never really worked, it was just kind of fun to look at. But the person from the Slice crew that shared this with me has redrawn it from phase 1, and when you do that, it suddenly meets the criteria for a hyperwave, because the rules of hyperwave theory state that each subsequent phase must complete all of the gains in half of the time. So suddenly, when we redraw it across the top here, above that 20, what is that? No, that's the 30k level. When we redraw phase 1 across 30k, suddenly all of this mathematically makes sense according to the rules of hyperwave. Now, does this happen or not? I have absolutely no idea, and I would suspect this is going to be near impossible to stay on trend for. But as you can see, if this thing does play out, it's going to give us some absurdly high targets, and also it kind of points to this completing somewhere in line with Chemo's February top. Okay, that would be absolutely wild for sure. And again, showing more confidence with what I was saying earlier about nothing really being that different, right? This cycle from back here, the 2017 top, the first time we reached 20k, that was a hyperwave. Okay, that was actually a textbook hyperwave. So I know a lot of people will simply be unable, totally incapable to even believe for a second that this is on the table. But the reality is, it is on the table as one of the possible outcomes. Finally, before we move into some charts, a little nod to the gold bulls out there. If you know, you know. Okay, the European Central Bank says that gold has overtaken the euro as the world's second most important reserve asset for central banks. All the pieces are starting to come together. That's right, the gold reval is on its way. So again, if you know, you know. For Bitcoin, let's see, right? Seems like we're retesting the cycle low. Let's see if we continue to push. As always, okay, the stop loss is here. It's public. You can see it right there, okay? 98,222. Unless we're stopped out, then long and strong. Nothing in the middle matters to me at all. But the stock market, again, still long and strong, stopped out or long and strong, doesn't really matter. It will be really interesting to me to see if the VIX gets crushed. VIX Crush Friday happens, I would say, this is a made up statistic by the way, but I would say in my estimation, about 80% of Fridays result in a VIX Crush Friday. That seems to be what I observe. Again, that's not hard data, that's Camel speculating based on experience, but it'll be interesting to see if we can close this gap at least and finish the week strong, and thus that news that's out at the moment would simply be an initial knee-jerk reaction to shake out people that are slaves to the tape. Gold, on the other hand, looks fantastic, doesn't it? It looks an awful lot to me like we're getting ready to do something like this. Again, not many people believed this was possible. It's also possible that it's this, right? Maybe we're doing this right now, okay? And we are not quite as extremely bullish as I thought we were. But ultimately, I don't think anyone's going to be complaining with this, apart from the people that sit here and perpetually try to call tops or say things like this is a boomer shiny metal or whatever it is, or Bitcoin's going to demonetize gold. Listen, you're wrong, okay? You can hold both. I do hold both. And I think you're going to regret not holding both over time if you do not hold both already. So overall, I think it's pretty safe to say, at least if you're a level 3 member, positioned fantastically for what's going on at the moment. As ever, we're not going to be slaves to the tape. We're going to take it one day at a time, pay attention to the invalidation levels, and everything in the middle is noise. So far though, as you can probably tell by my tone of voice and my approach to today's episode, I'm feeling pretty good about what I'm witnessing. All I really want to see is some nice green closes to the week, and then I won't have any problem at all going into next week. If we do get some horrible spill today and we close severely red with big red engulfing candles, then I think we can start to pay attention and be formulating a slightly different strategy going into next week. But for now, okay, cautiously optimistic as always, and we will see what the market can give. Please do consider subscribing, coming back tomorrow to watch the weekend's deep dive where we'll review the base case hypothesis. If you're a level 3 member, look out for the members only video I'm going to post for you guys tomorrow. And other than that, have a fantastic weekend. God bless. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel